Good. I wanted that to be a nice signature. That was Kevin, come on, fellas, come on over here. Elaine, what a job she's doing with transportation. How's transportation, okay?
Fine. You always talk about the supply chain.
I do.
It's really important.
I do.
This
You better
bill is going to
believe
help
it.
the supply
You better
chain and the
believe it.
workers.
Anthony? Thank you. Thanks, Tony, very much.
And we're watching President Donald Trump here sign that stimulus bill, that relief bill. It's a $2 trillion package. You heard him refer to a $6.2 trillion figure. That $2 trillion, of course, that's actual money, real money that's going to be injected into the economy. Steve Mnuchin says that injection will happen as fast as he can do it, possibly over the next few months. The remainder of that $6.2 trillion, of course, is more that virtual money that we're getting out of the Fed, those liquidity measures that the Fed has taken that now are approaching that $4 trillion mark. So here we are. $21 trillion U.S. economy, a $2 trillion stimulus bill, 10% of our economy. You throw in what the Fed is doing here, and we've got about $6 trillion of a cushion to help cushion this blow. I want to bring in Emily Chang, who, of course, hosts Bloomberg Technology, the program that is now in play. Emily, welcome.
Romaine, thank you so much. Of course, huge. The president signing that $2 trillion stimulus bill. This is something markets have been waiting for, investors have been waiting for, and that every day Americans are waiting for, another big day when it comes to the number of cases, the number of deaths as a result of this virus around the world. Italy reporting almost 1,000 deaths in just 24 hours. The U.S. now has more cases of the coronavirus than any other country in the world. Romaine, you've been, of course, covering the whipsaw in the markets. We saw gains leading up to this, but a very down day today. What happened?
Yeah, we ended the day down. You have to kind of put it in the context of the entire week. You heard Trump sort of refer to some of those historical markers, something like the biggest three-day gain that we had on the S&P 500 on Tuesday, Wednesday, Thursday, going back basically to the 1930s. You had the biggest one-day gain on Tuesday in the Dow Jones Industrial Average since the 30s. Some of that got unraveled today. There was this sense here that even with the rebound that you had earlier this week, that we haven't seen the bottom in the markets. We haven't necessarily seen the bottom in the economy, and we haven't necessarily seen the peak in the number of coronavirus cases. And as a result of that, Emily, you had some investors saying they didn't necessarily want to be exposed to this market fully heading into a weekend where they might be locked into trades that they don't necessarily want to be in.
All right, Romaine Bostick, our co-host of What You Missed. Thanks so much, Romaine, for breaking it down. Meantime, I want to get to another CEO that we've been following, Stuart Butterfield, the CEO and co-founder of Slack. Stuart joins us now from his home, where he is also sheltering in place. Stuart, you sent out a massive tweet storm a couple of days ago and gave us a window into what a wild ride this has been for you as a CEO, for Slack as a company. Nobody knows what's going to happen next, but we've seen the markets go up and down leading up to this. And I'm sure that you must have some sort of operating assumption of what the macroeconomic picture looks like from here. What are you operating on?
Well, you might be optimistic. And first of all, let me say it's great to be back. It's been a long time, and nice to be with you. I've been spending a lot of time with other CEOs in the software industry. No one knows what to think. It's not just the overall macroeconomic impact, but what do you do when your salespeople can't travel to meet customers? You don't have field marketing events. So figuring out like the long-term business impact can be really tough, and there's forces kind of on both sides. We've experienced an enormous surge in usage among existing customers, expansion there, brand new customers signing up, brand new teams being created, and the rate at which we're expanding right now is not sustainable. So that will revert to the mean. When I say not sustainable, I just mean we would have everyone in the world on in a couple of months if we kept going. But what is the long-term impact? That's really difficult to say. And I'll pause there because I think this is an interesting conversation.
Now, you've founded so many different companies. You've gone through various economic cycles. We've just had this $2 trillion stimulus package signed into law. Is that going to be enough to support, to lift the tech and the startup ecosystem?
That's a tougher one to know because it's not going to be evenly distributed. I can definitely see there's a handful of companies that are seeing an increase in their business as a result of what's going on. I think there's a fair number that are neutral. There's a couple that are just, companies where they thought they had 18 months worth of cash on hand, and it turns out when your revenue goes to zero or gets cut by 95%, you actually have 45 days of cash on hand, and layoffs become inevitable. So there's going to be a lot of companies that struggle. I'm not sure, maybe brand new startups will always be, of course, more responsive to the environment and might have more flexibility. But there's going to be some really negative economic consequences. There's going to be a lot of bankruptcies, and it's really difficult to predict, I think, at this point, at how we bounce back, in what way we bounce back. One thing that's clear right now, though, I think we're oversimplifying when we characterize what's going on as just working from home, because we've had employees who work from home for a long time. They have a desk set up, and they have a comfortable chair, and they have an internet connection, and they have childcare. That's not what's happening now. I mean, right now you have spouses arguing over who gets the kitchen table for the next video call, and you have a 3-year-old running around, and the in-laws can't help with the kid, and there is no babysitters, and you can't get your hair cut or go out for a coffee. So there's a very different environment, and one, I think, where there's an enormous amount of uncertainty. And one thing I think we all know is that human beings hate uncertainty.
So let's talk about human beings, because in this tweet storm, you got really personal towards the end. You talked about the adrenaline that you ran on for the first 2 weeks of everyone working from home. Now that's starting to wear off. It still feels great to be able to help, but you're locked inside. You're locked inside. People are more scared. Why did you decide to get so personal?
Well, I think, it's important, and I hope that the way that we've been handling this, and I know that a lot of other companies have been handling it, which is, for lack of a better term, kind of charitable towards employees, is the only way that companies are going to survive. If you have a culture where line managers are constantly supervising and checking in with people and ensuring that they're working, and demanding a certain number of hours in a world where a single parent who has a 3-year-old in the house just can't possibly cope with that, you're not going to have good results. And I think in one sense, I look at the way that we operate today, and I think, man, this is like everything I ever wanted to accomplish as a CEO for the last 5 years, but was never able to do. And by that, I mean, there is none of this behavior, which exists in every company of, Emily, that's an interesting idea. We should really check into it. Maybe we'll do some user research. We can build a little model. Why don't we circle back in 3 weeks and see what we want to do? That doesn't happen. People just go, and it's action. So in that sense, it's great. And I think to get to the point where employees aren't feeling like work is a source of stress, like they're going to be negatively evaluated because they can only put in 3 hours on a given day, is it's not going to serve anyone. And I think getting to the point where there's a really high degree of coordination, of alignment, and where decisions are being made quickly can more than compensate for the lack of hours. Ultimately, people have to stay healthy.
You tweeted that you added... You tweeted that you added 9,000 new users just halfway through Q1, which is almost twice as many as you've added in the quarters before. That said, you're going to see belts tightening, budgets are being cut, layoffs are happening. How long do you consider that kind of growth, or do you expect that kind of growth to keep up? And do you expect it to taper off or decline as the crisis continues to expand and eventually people start returning to work?
So the current expectation is that that number will level off. And to be clear, that's 9,000 new paid companies. And they vary in size, and they're all around the world. Some of them have a dozen employees, and some of them have thousands. But I think that will inevitably have at least a partial reversion to the mean. I do think that there's kind of a permanent step up in the rate of new teams adopting Slack that we can expect. On the other hand, again, it's very difficult for us to model or even think about how to model the economic impact we will see 3 or 6 months down the road as the the kind of the short-term impact, because I saw people laid off from hotel jobs 2 weeks ago. The short-term impact of that is kind of clear. The longer-term impact of how that cascades to the rest of the economy, to insurance payments not being made, landlords not receiving rent, the supplier networks kind of crumbling, and how you come back from that. You can't just turn the lights back on and everyone's back in the same job. That part, again, I'm not going to pretend I have a supercomputer up here that can predict what's going to happen.
Mark Benioff, the CEO of Salesforce, is calling on CEOs to take a 90-day no layoffs pledge. Is that something you would take?
Sure. I mean, we're also hiring, but I think like Salesforce, we're a software company, so we're not going to be affected by this. And I think that it can be received as a little presumptuous for someone who's running a company who just had 90% hit to revenue. So if you're in the travel business, hospitality, obviously if you're a restaurant, you can't really pledge not to lay people off. But
President
again,
Trump is talking about people returning to work, Stuart, as soon as Easter, and yet you've got all these health experts disagreeing with him. What's your take on the president's response and how he's handled this outbreak so far? And would you feel comfortable sending your teams back to work in the United States in 2 weeks?
No, we have 15 offices in 10 countries around the world. They are all currently either completely shut or open only for people to come in and grab things. We have no expectation that we're going to be back in the middle of April. I think the consensus among other CEOs I'm talking to is the absolute minimum is another 8 weeks, but I think most people are planning for 3, 4, 5, or even in 6 months.
So then do you think the president is misguided in this recommendation?
I think he's maybe willfully optimistic and hoping that there isn't enough of an economic impact to derail re-election chances.
Now, speaking of workflow, you've announced that Slack will now be able to integrate with Microsoft Teams. This is like your biggest competitor, and that people communicating on Slack will be able to communicate on those using Microsoft products. What's the interoperability there? And do you have Microsoft's buy-in for this? Are they doing this as well?
So we have a large number of enterprise customers, all different kinds, all around the world, companies like KPMG, Nationwide, the Veterans Affairs Department, which is an important one for us right now, because you can imagine they run the biggest integrated healthcare system in the United States. A lot of them are also Microsoft customers. In fact, the overwhelming majority of our enterprise customers use Microsoft products. And we've worked on integrations with SharePoint, with OneDrive, with Outlook Mail and calendar services. And we see Teams as just another step there, because those tools are used alongside Slack in a large number of places. I should say it's also, we're committed to an open ecosystem. So we also integrate with Cisco WebEx. We integrate with Zoom. And for us, this is the integration with Teams calling is important for customers who get their daily work done in Slack, but conduct meetings in Teams.
So, speaking about the wreckage that we will see from this, SoftBank, of course, as we understand, has been feeling the pain. SoftBank, a huge investor, they're going to be doing a big asset sale as a result of just the tumult that they are going through economically. Do you think that they'll sell Slack shares as a result of that, as one of the few bright spots in SoftBank's portfolio?
I cannot speculate. I think that they were an early believer in what we're trying to accomplish. I feel like we're in the very, very first stages. We're single-digit percentage penetrated into what's an enormous market. I want to do this for the next 25 years. Whether they sell now or hold, I think there's a growing number of shareholders who are really buying into the vision and becoming long-term supporters.
Now, I know that your team is doing a good job prepping you on off-the-wall and weird questions as this outbreak continues, because you mentioned that in your tweet storm. Yep. Your partner, Jen Rubio, who's the co-founder of Away, tweeted in response to all of your tweets that your night job is actually poop patrol. So given that, I'm here in my home studio working from home, like totally terrified that one of my children is going to run into this broadcast and interrupt us. You're at home, running a public company from home. I'm curious how that has changed your job and if there are any best practices, if you will, that you could share with us.
Yeah, one best practice, and this it might be a little different for you given your job, is we're encouraging people not to be terrified if their kids come in the room. We had a great moment. Normally, our all hands are kind of, they're an hour long, and people make slides, and there's a lot of rehearsal, and kind of it's a big production. And the first all hands we had after everyone was working from home was completely different. We didn't have the AV and the cameras and the stage and the lights and everything. We all did it from our home. At that point, I hadn't yet been able to get my hands on a 100-foot coax cable, so I had to do it from our laundry room, which is where the modem is, and it was 23 minutes long. It was, I think, 6 or 7 of us on the executive team speaking for 30 to 90 seconds each about what's the most important thing going on right now, expressing gratitude and appreciation for the teams who are really stepping up and doing a great job. And by far the best received all hands we've ever had. People loved it. It was authentic. We cut right to the point. It was quick and concise. But there was one moment where Julie Legal, who our CMO, was giving her update, and suddenly one daughter pops into her lap and another daughter shows up behind her and is kind of dancing behind the chair. She didn't skip a beat, and the reaction internally was really kind of heartwarming. People took screenshots of that and thanked her for kind of normalizing this, because it is very difficult, I think, for parents of young children to be able to cope with this. The lack of school, after school care, any kind of child care, nannies, whatever setup people had is no longer available, and it's a pretty serious challenge.
It is indeed. Well, we all appreciate you sharing how you're navigating that challenge with the rest of us. Slack CEO Stuart Butterfield, thanks so much. We'll see you on Twitter. Coming up, we're going to be talking about Apple. Apple releasing new screening tools to help in the fight against COVID-19. We'll be speaking with our own Mark Gurman next. This is Bloomberg. Apple has joined other tech giants in launching screening tools for COVID-19. I want to bring in Bloomberg Tech's Mark Gurman, who covers Apple. Mark, tell us exactly how these new tools from Apple work.
Hi, Emily. It's great to be on with you. Apple today on Friday released a new application to view different symptoms of COVID-19 and to be able to sort of input what you're feeling, what you're not feeling. It'll sort of walk you through it. Should you simply self-isolate and stay at home? Should you just social distance? Or do you need to do something more dire and call your physician or go to a hospital or an ER? And it's actually very intuitive. I used a couple of these tools online, and I think Apple did a great job with theirs.
So talk to us about some of Apple's other efforts here. They've been, as I understand it, tapping suppliers to manufacture masks. They've also been doing other things to try and help some of the health workers on the front lines.
Yeah, Apple has basically done everything in their power to contribute what they can as a technology company with a vast supply chain. They've donated over 10 million masks, as Tim Cook announced on Twitter earlier this week. They've used the resource of the supply chain to basically source and donate those masks. They have probably more agreements on the global supply chain level than any other company in the entire world in order to do that, right? They've also basically given their whole marketing footprint of their services on over 1 billion of their devices to the effort. They put the White House a briefing of different infrastructure for social distancing for people to view that video on the App Store, Apple Music, the Mac App Store, their website, their homepage. They have apple.com/COVID-19 right now. So they're essentially doing everything. They're doing 2-to-1 donation matching for their employees. Apple themselves have donated over $15 million already to the effort. So they're doing quite a bit on this.
Meantime, Apple has been leading in terms of store closures, and you broke the story that they're actually considering reopening stores in the second half of April. That said, we're also hearing that the next iPhone could be delayed. What does all of this mean for Apple's bottom line? What does Apple look like when, everyone starts going back to work?
Yeah. So first of all, on the store reopenings, and so what Apple plans to do is they plan to reopen the stores on a staggered case-by-case basis, region by region, across the world. There's 458 stores currently closed right now. I don't believe stores in the United States will be the first to reopen in that first half of April time period. I believe there will be a couple locations outside of the United States, in addition to the China reopenings that have already happened. In terms of the reports on the iPhone delay, I don't believe that to be accurate. I don't think we're going to see the iPhone launch outside of the normal September to November window. So I wouldn't read too much into that. So I think everything for Apple is pretty much going to be a-okay after this starts to, tamper down in the U.S. and other parts of the world. In terms of their vast supply chain, which essentially powers the company, my understanding is that is essentially up and running. It's almost back to normal, give or take a few weeks. Of course, Emily, we're sitting here today, on March 27th. That could be different, March 28th or a week from now. But from where I sit here today, I think Apple as a company is going to be quite fine.
All right, Bloomberg Tech's Mark Gurman. Mark, thank you so much for that update. Coming up, more of Bloomberg Technology after this quick break. Welcome back to Bloomberg Technology. I'm Emily Chang. President Trump has signed a massive $2 trillion stimulus package into law. Despite anticipation of this, investors were feeling pretty optimistic, but it was a big down day for the markets. Meantime, New York City Mayor Bill de Blasio has been giving a press conference while we've been on air. Of course, New York City remains ground zero for the most coronavirus cases in the country. Mayor de Blasio said he's now working on a rent freeze with the state of New York. This would freeze rents for the year of 2020. Coming up, we are going to take you to the White House where we're standing by for the daily coronavirus task force presser to start. So we'll take you there momentarily. Meantime, coming up, we're going to be talking about in-home testing kits. How do they work? Do they work? That's coming up. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. The U.S. has become the first country in the world to surpass 100,000 cases of the coronavirus. Meantime, testing capacity continues to lag. My next guest is the CEO of a company that released in-home testing kits last Friday, but then quickly retracted them. The CEO and co-founder of Carbon Health, medical director and co-founder of Carbon Health, Cesar de Javaharian, joins me now. So Cesar, tell us exactly what happened there. You released these kits and then you pulled them off the market.
Yeah, thank you so much for bringing this to light. So basically our goals at Carbon Health were to do early aggressive testing. And there's been a lot of news about the lack of equipment for healthcare workers, including personal protective equipment like N95 masks. So the idea was, let's conserve those supplies of masks, allow patients to have at-home collection, which is receive a test kit. They collect their own sample, securely put it in the mail, send it back off for analysis. So we felt like that would, preserve our supplies, increase the testing supply for the country as well. As we know, as you mentioned, testing is limited, and do it in a very safe way, similar to what Germany has done. So, in Germany, there's early aggressive testing, so you can identify who has the virus and who doesn't. So we followed the FDA's guidance on that, and by Friday had actually distributed a small number of those tests mostly to our existing patients. And then the FDA late Saturday night updated its guidance, at which point we had to stop distributing those tests, and frankly, to communicate to those patients that they could now come into one of our clinics where we were doing testing to get kind of in-clinic tests done. So unfortunately, as the FDA changed their guidance, we had to change along with them.
So are you still working on in-home testing kits, and do you expect to have refreshed kits or revamped kits on the market soon?
Yeah, we fully believe in this model for the reasons I mentioned before. It's critical, and frankly, the public and public health officials need to know what are the hotspots where patients are carrying the virus, maybe not necessarily hospitalized or dying from the virus, but where are the hotspots where the virus exists. So we continue to work with our laboratory partner, Curative, to try to get those at-home tests out into the market. We're also working with the FDA to identify, how well do these tests perform. Now, in the initial set of data that we've been able to collect through the laboratory partner, it seems like the test performs just as well. And frankly, there are even some studies that this modality is better than the in-clinic or commercial tests that are available. And so we're hopeful that that we'll get to the point where we can distribute these.
So what do you think is the root of the problem and why we haven't been able to get enough tests? So many people, my district, for example, is telling me if I feel sick, don't go in and get tested because I probably can't be tested, only if I'm feeling emergent symptoms and I need to go to the ER. Should I go in and expect to potentially be rationed a test? Why is it taking so long, and when will we reach full testing capacity?
So I think the FDA is trying to protect consumers from bad actors in the marketplace. I've seen offers from companies outside of the United States offering at-home testing, almost like you would do an at-home pregnancy test where the results come right away. And so the FDA, I think, is trying to make sure that consumers, patients, Americans are protected from those bad actors. Unfortunately, we feel like we've been caught in the crossfire since every test that we would do for at-home collection would be ordered by a physician, monitored by a physician. We'd use, and frankly, we're doing that today, our telemedicine platform to do video visits to check in on these patients. Now, to your question about the recommendation to not even be tested in certain municipalities, I think that's because the testing supply is limited, and we don't know when the supplies will actually catch up to the demand. So the test that we were advocating for, frankly, uses a different supply chain. The materials are different, scientifically proven, and appropriate. So it's one of the reasons why we're frustrated with the lack of movement and direction from the FDA along these lines. Now we stand ready. We're absolutely ready to start distributing these tests, ordering the patients who've received them, making sure that they get the appropriate care that they need to keep their communities safe, and frankly, to keep their local health workers safe as well. We're worried about health systems, hospitals, ERs, intensive care units being inundated with patients. And the problem is that most public health officials don't know in their own communities what the true prevalence of disease is. How many people in your community actually are carrying the virus? We frankly don't know that widespread testing.
And Cesar, to that point, Carbon Health runs a network of urgent care clinics across California, and I'm curious, what are you seeing at your clinics? Are you seeing instances of people coming in who look like they have this but can't get tested? And would you say that the situation is far worse than this 100,000 cases and far worse than we know?
So thank you for that question. So in California, we've been responsible for actually testing roughly 3% of all tests done in the entire state. And we're a fairly small technology-driven healthcare company. Now, when I look at the national numbers of roughly 100,000 patients tested, 100,000 patients testing positive for coronavirus with 1,500 deaths suggests to me that we haven't done enough testing in the US. And the true number is probably north of 3 times that, so north of 300,000. And I'm basing that on the German example, where roughly 0.4% of people who tested positive died. In the US, that number is roughly 1.5%. So I'm imagining that the true number is about 4 times, the true number of coronavirus carriers is about 4 times what we're seeing. So, the fact that a small company like ours that's growing, that, has the lever of technology, and that's the important differentiator here, is that we shouldn't be treating coronavirus like we did the Spanish flu, where people go into hospitals and clinics and get treatment. In 2020, we've got the lever of technology and the ability to care for people at home and help prevent those people who are sick from spreading it. And the fact that companies
I understand.
Yeah, we'd love for health officials to work with us to make sure that this is extended far beyond what we're doing locally. We've been offering our services for free, to our communities when there's a concern for coronavirus. Yep.
Cesar Dejavaharian of Carbon Health, thank you so much. Wow, upwards of 300,000 cases in your review. Appreciate you sharing that with us. Meantime, talking about the president again. What a difference a day make. Yesterday, he said he wouldn't force companies to make ventilators. Now he is ordering companies like GM to make ventilators by presidential memorandum. I want to bring in Bloomberg's Ed Ludlow, who's been following this story today. Multiple tweets from the president and now this memorandum. Ed, tell us where things stand right now.
Well, in a communication from the White House, the president basically says that GM has been wasting time. He's using the Defense Production Act, which gives the president powers to basically force General Motors to take on a contract to produce ventilators, something that they were looking at anyway. And General Motors has responded since that order by the White House to say, we've been working around the clock with our partner Ventec to do this anyway. We know that the plan prior to this announcement was that GM was going to start manufacturing ventilators at its Kokomo plant in Indiana. It had already started scaling up, hiring workers. They felt the 300 workers at that plant was not sufficient. They said they'd deploy around 1,000 workers, start shipping ventilators in early April, and scale up to around 10,000 units a month in a month's time. So they were already working on this. And as we reported earlier, there were frustrations on the GM side, sources telling us that GM had already secured the supply chain for ventilators. They'd already worked with their ventilator partner Ventec to get ready for this, that they've been working around the clock, and that GM was waiting for the White House and for the federal government to explain the details of what it was looking for in terms of the ventilators required. But now we have this order from the president.
So just to give some color, some of the tweets from the president earlier today, General Motors must immediately open their stupidly abandoned plant in Ohio, start making ventilators. Another tweet, they said they were going to give us 40,000 much needed ventilators very quickly. Now they're saying only 6,000. They want it to be top dollar. Always a mess with Mary B, referring there to GM CEO Mary Barra. You've got Ford, the head of comms there, responding that they're in active conversations with the administration, seeking guidance about getting approvals here. What exactly are these automakers going to be able to accomplish at the speed at which the president wants them to?
Yeah, and just on that, the order only mentions General Motors. There's no specific mention of Ford, who we know is working with GE on ventilators and looking at its own capacity to do so as well. This is a product that General Motors and Ford don't make, and both have communicated today throughout the day that they've been doing everything they can in terms of shoring up the supply chain. They've been sharing engineering capacity and talent essentially with partners who will make ventilators. And they're starting from scratch. You have to work in sanitary conditions. There was one automotive analyst on What Did You Miss earlier saying that when you start production of a new car line, it usually takes 2 months to get up to capacity. This is not a car, it's a ventilator. And even last night on Fox News, the president was conceding that ventilators are complex things to build, and that the reason he hadn't invoked the Defense Production Act, prior to now, was because Ford and GM were already stepping up. So the sense we're getting from the automakers is they think they're doing everything they can. They reiterate this line that they're working around the clock with their partners to get these ventilators into production. But now it all comes under this Defense Production Act. And the president's justification seems to be that no more time for negotiations, that they just have to get on with it.
All right, Bloomberg's Ed Ludlow, thanks so much for that update. We'll continue to follow the tweets as usual. All right, coming up, more fitness classes going digital as we're all working from home. If we're exercising at all, we'll tell you how you can. That is next. This is Bloomberg. So if you have time to work out in between working from home and homeschooling your children, well, there's an app for that. Joining me now, the CEO and co-founder of Future, which is helping folks work out remotely, Rishi Mandel, with us now. Rishi, first of all, talk to us about how the usage on your platform has changed as a result of the coronavirus outbreak.
Yeah, it's been staggering as more and more places go to shelter in place, and I think about 24, 25 states have mandated gyms and studios to close now. We've seen a surge in people looking for solutions. So about a 500% surge in people in web traffic, people looking at our offering, and we've seen a 10x surge recently in sales. So a lot of people picking it up. And then what's actually been really interesting is, for people who do use Future, and we can talk about what it is in a second. We've seen that the average person is actually exercising more, talking to their coach more. And so in this kind of time of transition, we've seen a lot of interest.
So talk to us about how you compare to the competition. Obviously, there's Peloton. Peloton has been offering free subscriptions as a result of the outbreak. You don't have to have the bike. There are other classes you can do. Right. I did a Peloton bodyweight workout with my children, which worked out okay. How do you compare?
So Future's a little different, and very simply what we do is we pair you one-to-one with a real human coach. Typically our coaches are world-class trainers. They've trained professional athletes, things like that. And all of our coaches are employees of the company. So you become, it's not something they're doing on the side. You become a central focus for that coach. And what that coach does is they train you remotely, right? They're not physically there. So they'll build a new bespoke workout plan for you every single week. We use an Apple Watch that we'll send you as a member, so your coach can actually see if you're doing it or not, and keep you accountable to doing that. And then they're in touch with you over text message. And so it's a very high touch relationship where you'll hear from your coach kind of actively. And so a lot of fitness, what the fitness landscape has are companies that are offering you equipment, whether that's in your home or in a concentrated space like a gym or a studio, or content, workouts, what to do. And there's no shortage of those on YouTube or apps. Future's a little bit different in that what we do kind of undergirds all that. Future pairs you with a real coach whose job it is to not only tell you what to do, but to keep you accountable to doing it, check in with you, adapt to your circumstances. And so as people have transitioned from working out in a gym or in a studio and going to that yoga class to being stuck at home, our coaches have no problem with that. It's pretty much the normal course of business for them. And so they can plan new bespoke workouts for you at home and then keep you accountable to doing those. Does that make sense?
Now, quickly, Rishi, we were speaking with the CEO of Slack earlier, who's been very public about just how this is impacting their company. Curious, are you guys reconsidering hiring? How are you either tightening the belt or making contingency plans, as the outbreak continues to unfold?
Yeah, certainly. I've been in tech for, coming up on 15 years and have been through, a downturn, a recession before. And so I think, our company has the perspective of, while demand is surging and there's no more relevant time than today to have a coach, we also want to be very careful and keep an eye on the macroeconomic environment. And so we are simultaneously trying to hire and grow and rise to the occasion in terms of the spike in demand, but we also want to manage our resources carefully. And so we're planning for, for a variety of scenarios, and kind of have a leadership team that knows how to be really careful with those. And we're constantly watching for updates. You've seen that things change day to day.
They do. Rishi Mandal, future co-founder and CEO, thank you so much for joining us. Coming up, we'll have more of Bloomberg Technology after this quick break. A week ago, the New York Stock Exchange announced it was moving to all-electric trading as a result of the coronavirus outbreak. But in a conversation earlier today on Bloomberg Television, the president of the New York Stock Exchange, Stacey Cunningham, said there are absolutely no plans to close the trading exchange. Take a listen.
The markets are functioning properly. There is certainly a lot of uncertainty around how the situation is going to continue to evolve, what the impact, both short-term and long-term, on companies and the economy more broadly. So a lot of that is uncertain, but markets are always operating with some degree of uncertainty. It just happens to be higher than normal right now. It is important to recognize that they are functioning properly. So very, very different from, whether or not we like the prices or whether or not we even think the prices are reflective of where the economy is going. It's important to recognize the market doesn't actually reflect the strength of the economy. It reflects public sentiment about the strength of the economy. So it's reflecting how people are feeling, and that's why you're seeing these dramatic moves.
Clearly, we're seeing a much wider band of possible outcomes in the market on any given day. We're seeing an enormous volatility right now. But is that market sentiment that you refer to, is that really a matter of what we think earnings are going to be, or whether we think these companies are actually going to make it or not?
I think it's a reflection of how people are feeling about those things. And so people aren't quite sure what the impact for their overall personal financial stability is going to be, what the impact of small to mid-sized businesses is going to be, and what the ripple effects that will have on the economy might look like, how some of the larger companies that have dramatic exposure to coronavirus, the effects of the coronavirus, certainly how long it's going to take them to recover from all those things. So, like I said, the market's not pricing all of that in, but it's pricing in how investors are feeling about that. The situation is evolving so quickly. Every day we learn so much more. I mean, it certainly feels to me like each day feels like a week and each week feels like a month. And we are really very quickly evolving. The situation is so rapidly evolving that I do think people are reacting to new information by the minute.
There have been times when the markets have not functioned because of circuit breakers. It just shut down and said, let's not trade for a while so people can really cool their emotions. Have you considered at all the possibility of suspending the market for a longer period of time? Some big players on Wall Street have raised that possibility at various stages, saying, look, there's too much panic. Let's just take a hiatus for a few days.
Absolutely not. We are absolutely not considering doing that. And it's really important that we even stop the dialogue around it, in my opinion, because the fear that the markets might unexpectedly close is enough to put selling pressure on the close. And no one in a position of power to make that change is talking about that. No one at the exchange level. The exchanges all feel the same way. The Treasury feels the same way. The SEC feels the same way. They've all made public statements about the markets needing to remain open. And there's a good reason for that. It's because investors need to have access to their money. And it can have an increased effect on panic in the market if you do shut down the market. The reason why we have market-wide circuit breakers is because they're a response. They are a well-calculated, well-studied, and implemented response that we took not during the time of stress, but in reaction to the 1987 crash, so that we would be ready for a scenario should it arise again. We don't regularly use them because we're not usually in that state, but we have used them 4 times in this month to date. And that's the mechanism that was agreed when you had time to think about it and have a rational approach. The decision was you can't close markets, but let's pause them so investors get 15 minutes to understand what's happening, to take a deep breath, to assess the situation, and react appropriately. The circuit breakers have been functioning the way they're intended to function. Closing the markets would be the wrong thing. It's not going to change the underlying concerns, and that's putting pressure on the market in itself. It's not going to. It will have the likelihood of penting up more selling pressure during the market closure, and it denies people of access to their funds when they need it most. So certainly that's not being considered.
Stacey, are you happy with the circuit breakers and the way they've worked, or do you think it's going to be time, certainly once we get past this, which I hope is not too far in the future, when we should revisit some of them? They were imposed, as I recall, in 1987. Have you learned anything from the last couple of weeks that would say, you know, we should rethink some aspects of the circuit breakers?
Yes, and every time we have a market event, the industry comes together and we analyze it and go through the postmortem process of saying, hey, what did we learn and what do we think we can change so that we further enhance the resiliency of markets?
David Weston with NYSE CEO Stacey Cunningham. Meantime, at the White House, the daily coronavirus briefing has started. The president is speaking there. You can tune in on your terminal. Go to Live Go to catch that presser. That is it for us for the day. Everybody, stay safe this weekend. This is Bloomberg.
Cuomo has been very nice. They've really appreciated, I think, what the federal government has done. You look at the hospitals that are being built.